Hello, 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 everyone. Mike Arnold here, co-founder Path Trading Partners, along with Bob Iacchino. Hope everyone's had a great weekend so far. We're going to prepare ourselves for the coming trading week. Welcome, Tesla Force. Happy weekend, William. We will just remind me we can look at WEAT. You are welcome, Ken. Hope you're having a great weekend. By the way, besides our regulars, if you're new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer term viewers, please do hit those like buttons and leave some comments. So, again, hope everyone's having a great weekend. I did record a stock sector overview, and that just is uploading as we record this one live. So make sure you check that out after this live stream is over. And if you're watching this live stream on demand, make sure you do check out the stock sector overview also, please. So, where do we sit? Watching for a potential bottoming pattern this week. We did get a key close below our 62.5% level on Friday, so that does favor some slightly lower price action, potentially going into the beginning of the week, but we'll be watching for a bounce. We'll be watching for a bounce. I was just talking about that, Ken. I'm watching for a potential bounce this week. There's a lot of things lining up for a potential rally. Now, it's sort of getting chopped back and forth right here. Again, the price action on Friday was absolutely horrible. Remember, also we are in negative gamma mode. Okay, so and we have the Fed meeting coming up Wednesday. So if you look here for this week, not much going on. We have consumer inflation expectations from February, but we already got bad inflation data from last week and inflation expectations on Friday. Tuesday is going to be really interesting. PPI month over month, core PPI month over month. Those are going to be interesting, and they can possibly move the market significantly. Then Wednesday, we have retail sales. And we also have the major three. We have oil stuff because I'm watching for a top in oil also. And then the biggie is the FOMC, but it's essentially the 25 basis point hike is already baked in, but we have the press conference too. Now remember, it's in lockdown until the press conference, so you can't have any Fed talk until Wednesday at that press conference. Thursday, you have some building and permits and housing starts and jobless claims. So again, you can have some stuff move the market then. It's just going to be a very interesting week. And then you have the CB leading index and existing home sales, and Feds start speaking again. Besides their a little announced the press conference on Wednesday, again on Friday, they start rolling out the speakers. So lots that can move the markets. By the way, let's see here. Let's see. Oops. I'll have to come back. Why did that log me out? Hold on. 1 second, everyone. Sorry about that. One second. Here we go. Just for a reminder, this is a great little site to sign up for too. Tier 1 Alpha. I'm not sponsored by them or anything. But for gamma exposure, you can see the for the S&P, it's still 4,400. And we have options expiration on Friday. So that's going to be very, very key going into Friday. Options expiration 4,400 all the way here, which we have our major 62.5% retracement level and a significant level there. So, and that's where the options expiration flip is. What does negative gamma mean? That means upside and downside moves can be, it's like a positive feedback loop. You get them exaggerated. Positive gamma is a dampening effect. Negative gamma is a exasperate. I don't know how I'd say that. It makes the move stronger. And we saw that especially on Friday with that relentless selling. Friday's little app selling all day long. Now, That brings me to a key point. We have a clear path move to the upside. Also, there is an aggressive buy signal on a 4-hour close above this last bar, which would be 41.89. So that's going to be my first warning sign that we're already in rally mode if we don't make substantially lower lows. You can see here we came up to the top of the rotation zone and rotated down strongly on Friday. So I would not, I don't know if it's going to be a bloodbath for Monday and Tuesday. We could make another push lower, but we have a lot of key support in here. And even if we did make a push lower, we might be setting up for, I mean, it would have to get below about 4,100, but we could possibly set up for a divergence play also to the long side. What's my other little warning sign that I'm going to be watching besides that 4-hour buy signal? If we come down here and retrace and get a close over the 43.14 area, that is a continuation to retest this high area of about 43.84 to 4,400. So our first warning sign is that 4-hour signal. The next warning sign would be if you get a close above 43.14 on the S&P. Now we have a major cluster area right around this 42.83 to 42.90. So if I start seeing momentum through that intraday, then we've also probably put in at least a temporary bottom. So that's the key things we'll be watching for. Now on a push lower, because we have to prepare both sides. And also, by the way, on this rally, you see this clear path move to the upside. So there is not a lot of stopping points, especially once you get above about 42.25. You don't have a lot of key stopping points in here. You have some significance about 42.55, then you have back to 42.86, and then that 4,300 area. To the downside, you can see we stalled out at the first harmonic here, 41.92. Below that, 41.77, and then I am back down to about this 41.56 to 41.46 area. On the weekly, remember, we're trading against the weekly rotation zone, so that means we still can get rallies. But rallies, especially up around this 4,400, is just going into the weekly rotation zone, and the top of the weekly rotation zone is right by a key harmonic and a retracement area of about 44.64, 44.63. So on a stronger rally, that is a major resistance. And we are still making, you can see here, lower low, lower high. So even on a rally up to this area, we'd still have a lower high potential area for another significant rollover. Now, if you break through this 41.05, 4,100 level, 4,068, then 40.41, and our major target though would be, if that would be a horribly bloody week, 39.77. So where do we sit? That is what we're looking for in the S&P. NASDAQ. Again, NASDAQ, I need to get a key close. Let me flip this around real quick and see if we start getting a little rally up. You get a close about 13,640, which is right where these candle bars are, and the 62.5 retracement from this area. Without making a new low, then that flips it to retest this high area. By the way, this is not a valid double top for anybody wondering. It's not reversing enough move. And you see how we stalled out on those shorter term harmonics. Same thing, we have an advanced clear path move to the upside should it start the rally mode. There's not a lot of stopping points here. Especially here, there's a 1 hour rotation zone and our key level about 13,431. But above there, you can get a really quick rally back to around this 13,786. In between that area, I will be keeping an eye on right around 13,620. Now to the downside, 13,205, which you have some pretty significant support down here. Okay, you have some pretty significant support, and then below that 13,132. So we could if we do continue lower, which this price action on Friday does favor a little push lower, but there's major support down here. So that's this major support area. That's where we bottomed back at the end of February. It's where we bottomed in around the 8th of March. So keep that in mind. Now, that would also form a triple bottom. And longer term, that does favor a continuation lower path, even if we do get a bounce on. You can see the NASDAQ has been significantly weaker than both the Dow and the S&P. To the upside, I gave you a couple key levels we're watching, but let's go back to that 4 hour. Again, if we get a close above this 4 hour high, 13,486, 13,487, just go off that level. Then I'll be watching for the potential. The reversal bottom could be in without really dipping down to test this area. So that's my first sign that I will be watching for, that we potentially put in the low. We could get those quick little aggressive buy signals on the S&P and NASDAQ, and we'll take a look at that Dow and giving us a little heads up that, hey, it's, we're not going to get that sell-off on Monday and Tuesday, so Friday was it. And also remember, with the Russia-Ukraine situation, everything still trades off of these key headlines. So if there's further progress in peace talks made, the rally mode. If things are breaking down or there's bombs dropping, things are selling off. So that's what we have to still pay attention. That even exasperates this market conditions. Now, we start getting those buy signals, and especially above 13,786. I'd watch for that retest of Friday's high, and then my next target, we have the top of the rotation zone and the harmonic 13,952 area. Then miners 1444. But if you start getting up above there, I'd be watching for a return to this key sell-off. The 50% level is coming in at 14,130. Also remember, on a weekly perspective, you have the weekly rotation zone coming in with that 50% retracement. So that is going to be pretty significant resistance if we do continue the rally, which I am expecting that short-term bounce. But again, we have to wait for confirmation. Hello, Options 22. By the way, Options 22, I'm watching for now a key top in crude. So I know you have some oil stuff going on, so you're going to want to manage those positions really, really closely, because we could be back in for a pullback in oil. I will get to that in a few minutes. I just saw you jump in. And we're still very bullish on commodities and oil in general, but you're starting to get to a potential out where we could get that bigger pullback. Dow, which did not trigger the continuation follow through on Friday. So Dow holding up the best, only off 1% on Friday. So that's the one that did not favor a continuation sell pattern. So that's what was interesting. Two of them did, one of them didn't. But you still above in the Dow. We still have a potential aggressive buy signal on a close above 33,133. So that's what I will be watching for. Now, it did close in this clear path move, but right at these key lows. So on a little move downwards, I'm then targeting about 32,530. Then we break through there. I'm targeting the most recent low area, about 32,300. On any rally up, you also have that advanced clear path. This isn't as nice because you have a couple stopping points behind here. But if it does get some momentum bars, my first target is 33,186. And then my next target is 33,310. Then above there, I'm watching for a retest of the high area from Friday. Let's see here also. Above there, we have the rotation zone, but my next major area, let me just see if this is still valid also. And this double is still valid. It has confirmed, but not triggered on a closing basis. So if we do turn around in the Dow, 33,815, 34,036 are the next key targets higher. Let's see. All right, glad. I just wanted to shout that out in case you had to run before the end of this, because I'll get to. Let me just look at the Russell, then we'll get to crude. Russell still caught between our two key levels, 1974, 1975 for the breakdown, and for rally mode, 2052. You can see we're still ping-ponging between them roughly. If we do break down below 1974, next major is 1927. And then the key harmonics also have to be updated to the downside. But we're a long way off from that, so I will have time in one of the next previews before the open or the overviews after the close to point out those levels. By the way, the DAX, we started covering more and more. You have this still potential double top pattern, but you can see these key support, key resistance. So I'm watching DAX above about 14,100. Then the bottoms in, and I watch for a continuation rally play in the DAX. Below 13,250 area, then I watch for this double to unfold and potentially a return to 12,687. Crude. We get a close below 102.76. Then I'm watching for my first level is this 158 to complete the double pattern, which is still in play. Nothing has invalidated this. It's still your key support right in this area. You see hitting that first target, then just bouncing right in front of it a couple times. But we roll over in crude again, 158, but then the major area is to find support. Let's see, we have this channel area. We have the bottom of the rotation zone. So my first key support, then it goes down to 95 to about 96. If we drop below that, then I'm watching to potentially back to 88, dipping inside this channel. Now, this is a short-term pullback. I'd watch for a basing move or a reversal pattern back in here. But if you start dropping back in this area, that's where I'll be watching for key support and a rotation back up. Why do I bring this up? Because if you're in stocks, whether they be something like Chevron, ExxonMobil, some of the drillers, some of the other oil energy plays, you could see a bigger pullback. So really pay attention to this on a longer term basis, because we could get a pullback for a few days and then some consolidation before another up move. Gold, what's interesting is we might have a topping pattern in gold. This was actually a bearish week on gold within a bullish context, but we had that head and shoulders. We were watching these head and shoulder patterns, which confirmed a little rally up, but we're nowhere near stopping that out. Key area for that for me would be above, on a close above 2038. Other than that, I'm targeting 1931, 1904, and then major support coming in at 1877. And we could easily see the bigger pullback in gold, and we're long-term very bullish on gold, so then I'd be watching for reversal patterns. This is nothing I'd be shorting. This is where I watch for potentially bottoming moves to reestablish core positions, trading around a core position. Silver, interesting enough, did not trigger that head and shoulders yet, still holding that neckline. So I'm still watching for that neckline to potentially be broken. All right, and then wherever that neckline breaks, I have to modify my target. So as longer this takes to break, the targets go upwards slightly. What would change all that? I'd have to get into short-term bullish mode on silver again on the close above 2675 area. Notes. Again, this was not a double top, but it was just a continued move down with the gap fill. And then once we got that close below 62.5, retracing to about 125.31 to retest the low area 125.18. If we break below that, I'm going to 125.04, then 124.23 is a major level. And notes longer term, you can see here on the weekly, back into the weekly rotation zone and the rotation back down. So I'm paying attention for new lows in the notes overall. Let's see, dollar index still in bullish mode. I got a topping pattern in here, but now we're coming up to a potential double top. So that's what I'm still watching for. On the next major harmonic area, though, is 99.79, and this is a great little place to use a little reverse harmonics to help fine-tune things. And you see here we have a little harmonic cluster up there. So even if we rally up into this area and roll back over, we could still have a potential double top. Where would that potential double top take us? With the right now, I would use the conservative projections. I can't do that yet because we don't have the right-hand side in, so I'll have to use these other projections to give me an idea. And that would just return me back potentially to the bottom of the weekly rotation zone. And it is lower probability since it is against that weekly rotation zone and against the daily rotation zone. So keep that in mind too. Now, I'll get to some stocks in a second. With all that being said, we have our ratios, and if we get a bottom in, again, longer term, we favor value over growth, but short term, we could have a little double bottom in the ratio, which would then favor growth over value. So how would I be looking if I was looking for stocks to play? There are two areas I'm watching. Growth stocks, if we get this shift with a bottom in the indices and in the futures that I just reviewed, like the S&P, the NASDAQ, and the Dow, get that short-term bottom, I'll be watching for aggressive plays in some growth stocks. And what kind of growth stocks? I will be watching for more of the mega cap growth stocks. I will be watching for a potential short-term bottom in some mega cap. MGK is that symbol. That's the ratio, but I will be watching for that. And by the way, you do have a weekly potential double bottom. This is in longer-term sell mode. So again, these would be very short-term rallies, and they would be to watch for a play to roll over again. And when I say mega cap, if you want to know what kind of things I would be talking about, you can always go to ETF.com and just, you want to know, like we have the mega cap, Vanguard mega cap growth fund. Oops. I hate when I do something like that. There we go. And you can always look at some of those top holdings. And you look at some of these top holdings. I know it's stuff like Apple, Microsoft, Amazon. So whatever chart patterns you have worked the best in some of these top holdings, I would take a look at. I'm actually pretty interested in something like, if we did get a move on, I'm interested in potentially something like a quick little Home Depot play. A quick little Home Depot play, especially if we get above the 330 area above the daily rotation zone. We still have a gap play, so we could make a quick little run upwards to 343. These would be very short-term plays. Why would they be short-term plays? Because you could fill this gap and hit that weekly rotation zone over the next couple weeks and then roll back over. Another one I'd be interested in, still with Apple, as long as it holds this 200. And that would just simply be on a bounce play, not a long-term new highs play. And again, those are aggressive, so I would be aggressively locking in profits and moving up stops. All right, William, you wanted me to look at WEAT. The Wheat Fund ETF, by the way, I'm watching. This is wheat. Let me go to real quick. Let me get back to the grains, because you can see here we've had that pretty substantial pullback in the future straight to the 50% level from this run up, from this bottom back in January. This bottoming formation, and whether you go from there or you decide this is the starting move is really not relevant, because it's giving you the same virtual range. You start breaking below about 1050 in the futures down again, then I watch for the bigger pullback, and we get a close below about 973. Then I'm watching for a return to major support. For the continuation move, here's your little hint that I'll go back to WEAT, because I would analyze this on the futures. You get your key resistance now is about $12 to $12.40. So even on a bounce, I'd be watching for a potential rollover then again. And I'm very bullish on grains long term. So what's that telling me? That we just get the bigger pullback to positions things. Now, why that's relevant to wheat is because this is a wheat fund ETV. And we can do that. You can do that same kind of analysis on here. So it's, you couldn't get the close below the 50 yet. Your key area I'd be watching is 925 to 944. So this would be a very strong area for a stop. Because if you get a close below 925, my next target would be 855 in the 50. Then I'd be watching to the major breakout area, which would be back here. What's my clue that we could be rotating back up? Again, we're in the rotation zone, and we just got that rotation back up Friday. But your major resistance now is about 1118 in this fund to about 1158. So if it can't get through 1158 on a closing basis, pretty much short-term tops in, and I need to watch for more of a consolidation pattern and then a longer-term re-entry play. Again, we spiked up into significantly overbought, and this is not a bullish weekly candle. That's why I'm really starting to watch for the potential bigger pullback. And people might question, well, commodities were really bullish on, and I put up that sector overview and took a look at commodities like DBC. And see, we came up to this key harmonic, could not get above it, pull back, and I'm watching the bottom of the rotation zone. So we have a lot of potentially significant topping patterns in things like DBC and in DBA. Now, because the thing with Russia and Ukraine is still ongoing, that favors a continued higher move in wheat. Stuff might have got overdone and needs a pausing. And who knows what can happen. I just can say with what's going on with the charts, and we do have potential tops in place. That's why I'm monitoring it very closely. Now, things can change moment to moment because if the war even escalates more than it already has, which is a horribly tragic situation, then this could just easily get above those key 62.5% closing levels and retest those highs, most definitely. But I'm not being aggressive on anything until I see some continued price action to the upside. So I hope that answers your question, William. I need, with these rotations, again, they need to now prove themselves to the upside based off this significantly overbought with potentially topping patterns. All right. Hey, Lauren. I will cover URA. I am very, very bullish on uranium in the long term. And yes, we could pull back, and this is trading around a core position for me. So pullbacks at key levels are to be bought. We did break above this key resistance area, becoming support with the rising rotation zones. And I know I got asked questions because I've told a few people, about uranium, and they're like, well, why didn't you just wait for a pullback? Because when you break out of these key levels with everything that's going on, this could have rocketed also up to 28, 29, and then your reward to risk even better. So I've talked to people and said, put on, a partial position and then on a bigger pullback, especially if we could pull back to this 2260, put on the rest of a position. Okay, then you have a really nice, and this is where I will advocate for what people call dollar cost averaging. I call it trading around a core position because I'm looking for a couple pre-planned entries. It's not just, oh, it's dipping, I'm going to buy more. It's okay, I went in with a light position. Now I'm watching if we get that pullback for a heavier position. Longer term, the uranium supplies from a fundamental perspective are very, very tight. More and more countries, especially with what's going on in energy, are looking to restart and or extend reactors' lives that were due for phase out. And there's already an incredibly tight supply of uranium. So even on pullbacks, that's where, this is tradable around the core position. However you want to trade uranium. We've also been in URNM. Again, breakout, now pullback. But here's your pullback if you're looking at URNM. First key area, we could even pull back to 81.55. You could even pull back as low as here now, 75.85 with a rotation back up. So longer term, I mean, these are long-term plays. It's just like gold is a long-term play, silver's a long-term play, and I'm watching for pullbacks, as I talked before, in gold and silver. Pullbacks are to be bought, but it got a little overextended. But here's the problem. If you just go, well, why are you still long up here and didn't take everything off? Because could gold theoretically, could something happen in the world and we'd be trading at, upwards of 2200 in a blink of an eye? Yeah, look at this move. I mean, in a matter of a few weeks, we went from 1800 to 2080. Okay? So if you're trying to time everything exactly in these kind of market environments, it gets very difficult because you can have explosive moves in anything commodity related. And there are still a lot of people short things like uranium and gold and silver, especially in the paper flow. So watch out for that. That's why I have to position myself and then watch for these key pullbacks and trade around a core position. I hope that makes sense. There's time to be patient, and this is times then to figure out your key entry points and then figure out where your stop is in case the whole position is wrong. And look, with gold longer term, we could still theoretically on a longer term basis pull back and even pull back to 1700, which would be a gift to me. I would love it if you pulled back between about 1760 and 1700 to reload on a longer term core position. Doubt we'll see it there. I mean, we got key support in here, then key support here. Do I know where it's going to stop? No, but I have my targets already set as I reviewed with gold, and I will watch for potential bottoming or short-term reversal patterns there. And this is also where on rallies, I take some off at key levels and then look to add it back on pullbacks. So let's peek in on Tesla. I know some people, if they're not watching this live, they will be watching the replay. Again, Tesla, if we do get that short-term bottom and money flows into mega caps, remember Tesla was in that ETF. Where is that? See here, Tesla right there, 4.2% of the holdings. So we start getting in the hyper growth stocks again and some mega caps. You could see a short-term rally in Tesla. Would I just bother buying it right here? Because no, I bearish longer term. No, it needs to prove itself. The first little warning sign, and I really have to wait till it gets above this 860 area. And then it would be a play, and I'd really be targeting possibly this 900 area again. But you have a lot of stop. That's why it would just be a short-term bounce play. Look at all the stopping points you have. There is nothing. You're not into like a clear path move until you get to about 955. So that's why these are tricky. And no, this is not a double bottom. I know people also. For some reason, they see every time they see two bottoms in a vicinity, they still say double bottom. Now, if it rolls over and breaks down through 782, it stopped at a cluster area, which I said on Friday, 795. We break down below 782, another cluster 770. And that is key because if you get a daily close below 770, it favors then continue retesting low price action. All right. Well, I am not seeing anything else. Let's just peek in on a couple of those mega caps. I'm not seeing any questions. Amazon, if you wanted to play an Amazon play above 29.90, especially if we're getting those bottoms in the indices, that's a quick play to about 3,075. Longer term, the only way I can get really long-term bullish on Amazon is on a close above this peak at 32.77 virtually. Short, because it's against the rotation zone on the weekly, we have a lot of stopping points. Now you get a close above 30.75 with rallies and mega caps and growth. You could play this easily for a little further bounce. What's my key area? I'll be watching for a breakdown. Like tomorrow, if we start breaking below the low from the 10th of March, I am watching this for this gap fill. You remember they announced the stock split and the buyback program. But too many people, oh, it's just going to new highs. No, it has to prove itself. There's a lot of stuff it's got to get through before it can go there. And if the markets continue lower, then this could be an easy, quick gap fill play. There's another mega cap, Facebook or Meta or whatever the crap it's called. Again, rolling down. Here's the key area. Does this work? Reversing this move. Let me see if it does. Let me see if it does. We got to do our analysis. Yeah. Here's your little play, because this is not why this isn't a triple bottom, because it came back up, and this is the move that created this double bottom pattern. So above 199.10, 205.59, 208.84, 212.09. Look at that with the top of the rotation zone. So this could be a key play. Would I front run it? No, I would not. But you get above, we start getting a market bottom, you get above 199.10, you could see a quick little pop to the upside. There's another play. And again, you look at here, Meta Platforms, 4.13% in that mega cap ETF. So those are the kind of plays you are looking for. And they are quick little plays. This could trigger, get to the top of the rotation zone, this prior significant resistance area, and easily roll over again. And that's not even taking it back to the weekly rotation zone. Now, you might have a weekly potential double, but we'll start looking at that if we do get back to this 212 area. EWZ hovering around the 200-day. EWZ, yeah, it is hovering around. This is the Brazil ETF. Again, if you get some pressure on commodities, could this easily pull back? Yeah, but I'd be watching this 32 area for support. And again, I'm still bullish on things like Brazil as a long-term play. It is still hovering around here, trying to burn off that resistance, but now you have the first cross of weekly rotation zone. So remember that level I just said. It could pull back in here, and then we get the longer-term rotation back up. And remember, we had that key area right in here, 34.87. Couldn't quite get there. At this point, we got to reset those levels. But I'm watching a breakout above about 34.75. I'm watching for it to run towards that harmonic and that 200 week, and then run towards about 36.74. But this is where I wouldn't be. This is where either the play for me would be, if we get that pullback, watch for a re-entry signal around here, or if you get a rally, then it would be a breakout play to the upside. How much weight do you put in early futures price action going into a trading week for direction, like tonight before the Asian session opens? Minor in Asian session. I will start watching the European session. I'm actually going to be setting my alarm for the European session. Okay, because the European could set an interesting tone for a week, especially if we have a strong rally in the European session and then we hold it in the US session and don't really retrace it that much. Then we could have a short-term bottom also in play, but that would also probably trigger that 4-hour buy signal I talked about earlier in this live stream. And you can't judge the whole week on a regular week. Now we can say, look, because we're hitting that possible very key support area. We get that rally in Europe. We get it holding in the U.S. sessions. We could easily run or hold these key levels going into the Fed meeting on Wednesday. But I already think that 25 basis point is fully digested. So I'm more not worried about that unless what'll be interesting is not the rate hike. What will be interesting is the press conference. And we still have volatility because we have the what were the other numbers coming out on Tuesday? We have the, where was it? The PPI. Producer Price Index and core PPI, which is a major component of inflation. So that is going to be interesting also. So there is stuff between what's going on just with the economic releases because of inflation running so hot, And especially what's going on with Ukraine, Russia, that's going to determine even more so beyond the inflation numbers. It's going to be more determined by what's going on with Ukraine and Russia and the scrolling headlines. You're welcome, Michael. Quick question: if the PA is going to break through to 50 or 62 and move up or down, what time frame should be keying off of? Tesla's going to if Tesla's going to bounce off 770, what time frame would tell us that? In this, I'd be watching it on a 4-hour time frame. Preferably, you'd want a daily close because, again, I'm not trying to call tops or bottoms in here, but you get a daily close above some of these key levels or below those key levels. That's where I'm really watching for that price action because of where it sits. If you get a daily close below this 770 area, favors a retest. The probability favors a retest of this low area between 722 to 703. You get a daily close above the daily rotation zone, and I just go off about 850s. I just probably go off about 860. That favors a run for me closer to the 50. And once I got those closes either ways, that's when I'd be looking to play it more intraday. All right. There we go, everyone. Thank you for joining me. I hope you have a great rest of your Sunday. Happy daylight savings time. Could we just get rid? Who thinks we should get rid of daylight savings time and just stick on one time all year round? I'm a fan of trashing the concept, and can we just go to one time? Not saying everybody should be on the same time. I'm saying without changing clocks. I'm tired of changing clocks. I just want one time all year round. Like when I lived in Arizona, it was one time all year round. Never had to change clocks. It was wonderful. With that, let me know what your thoughts are in the comments. And by the way, if you are new here and found this helpful, please do consider subscribing, ringing that bell, and hitting that like button. And here's our comment from Lauren. Me super tired. Me too. I am super tired too. Getting up that extra hour early. And now I'm be waking up for the European session, so we shall see. But I will be here for the market preview tomorrow morning because there's just so much going on. We will keep doing those for the time being. Let's see. Had it my whole life, so annoying. This is my first year doing it with a kid. Brutal on the baby sleep schedule. Yeah, it's why do we need it now? We don't need it. We don't need it. Let's just scrap it. I agree. Drop the daylight savings thing. Let's just pick what time we're sticking with and stick with it. Good hearing from you. Have a great rest of your day, and I'll talk to everyone later. Bye for now.